Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor. I wanted to start today off with, in yesterday's video I didn't really go over anything specific to Ripple, but today I wanted to briefly go over those 2 or 3 important things that involving Ripple that needed to be gone over. Yesterday, Brad Garlinghouse, the CEO of Ripple, did his Ask Me Anything with Corey, and I'm drawing a blank on his last name, but with one of the other executives at Ripple. And C3_Nick, who I mention a lot on here, he did the best summary of what was talked about in the Ask Me Anything session. And so I wanted to just briefly go through these points that he made, because some of them are really, really huge and some of them are okay. But anyway, the first one, and I thought this was one of the bigger ones, Brad Garlinghouse said that Q3 will definitely be a record in institutions buying and holding XRP. Now, that's huge. And what he's referring to is people, the institutional investors that are coming straight to Ripple over the counter and buying XRP behind the scenes. And I've been telling you, they're doing this behind the scenes. And then, and I'll go over it a little bit today, all of these, whether it's the institutional investors or the brokerage houses, all of these people are doing things behind the scenes to get themselves ready for everyone else to come in. And that's just the way they do business. Okay. Next thing, Brad Garlinghouse, he said, I've had conversations with some of the biggest banks in the world. I've had conversations with small banks. Did I read that right? I've had conversations with some of the biggest banks in the world. I've had conversations with small banks. I'm very optimistic that this is a product that solves a real world problem. And then he says, we expect to make progress towards the end of the year and excited for what we are going to be able to share between now and the end of the year. On XRapid, if it is really taking costs and friction out of the system, people are going to take a serious look. We have heard from our customers, and they not only want to hear from us directly, but also want to talk to each other, such that you are stimulating that activity that is critical to building a network. And then at Swell, we will be focusing on our customers and what is happening. And this is another huge thing that came out. He said, we signed 2 production contracts per week in Q2 2018. Now that's just huge. These guys are growing extremely rapidly. And I wanted to tell you my takeaway, not just from Brad, but from Corey, from both of these guys. I watched their body language very closely yesterday, and you can see the confidence in these guys' eyes. You can see what I see when I look at Brad Garlinghouse speaking. I can see that it's almost a painful look in his eyes that he can't tell you all of the things that are really going on that are really huge. You can see it written all over his face. You can see it in the way that they speak and the way that they talk, and the way they carry themselves. I think there are many, many, many more huge things going on behind the scenes than we could ever really know. But he has the non-disclosure agreements, and he's got a lot of reasons that he can't speak about a lot of that. So anyway, moving along. I woke up this morning to this piece of news. Now, on its face, this is great news. But like I've told you before, having been in business for a long time, lawsuits are it's a cost of doing business. And the truth of the matter is, maybe it shouldn't be that way so much, but it is. Being sued, if anyone's making any significant sums of money, they're eventually going to get sued. That's just the way life works in America these days. So yes, this guy dropped the lawsuit because obviously it was a frivolous lawsuit, and he dropped it. I guess maybe he got tired of paying the attorney's fees. I don't know, but they didn't really give a reason. But he dropped it. But there will be other lawsuits. If you're high profile and you're showing that you're making a lot of money and having success, you're going to draw plaintiff attorneys to you like flies to honey. So that's just the way it works. All right, moving along. And I do have a slight bit of a cold. I think I got from my 6-year-old. Thank you very much. But moving along. Okay, this next piece of news, this looks bad on its face, but it's really not, because the excuse that this is the SEC rejects non-Bitcoin ETF proposals. But if you go down in here and you really look at it, their reason for rejecting this, and these were ETFs that were tied that were going to be tied to futures, but the SEC noted in here that in so many words they said that the Bitcoin futures trading volumes are not high enough for them to be comfortable putting all these ETFs out yet. Again, I keep saying this, but the youth of the crypto market is one of the largest reasons for everything that's bad involved in it right now. But all of that's just a time issue. It's just a matter of time. Time and bodies coming in that are going to invest. And believe you me, they're coming. All right. And now I want to talk to you about something pretty interesting. I was sent from a friend that listens to my channel. I was sent this report. Now, I want to say up front, this is something that Edward Jones sends out to their customers or whatever. And this doesn't have anything to do with Edward Jones in particular. This just happens to be their report. Every brokerage firm in the country is putting out similar reports. But what I want to before I go through a couple of things on here, I want to explain to you. I've told many of you that I used to be a financial advisor with a top 3 Wall Street firm. Okay. And I've kind of described to you the way it works on the inside before, but I'm going to go through it briefly. Many mornings we would go into the conference room. The first thing in the morning, we would go into the conference room, and a salesman for many of the companies. It could be a salesman from a company like ProShares that sells ETFs and wants brokers to sell their ETFs. It could be Benjamin Franklin that has a new mutual fund product. It could be it could be any number of companies. One of the newer things, it's not new now, but it was relatively new at the time, is something they called managed money, whereas a broker might make a commission on the sale of a stock or an ETF or a mutual fund that's a one-time commission. With managed money, the financial advisory industry figured out, hey, we could residualize our businesses and we could charge our clients 1% to 2% a year instead of getting a 3% hit one time on the sale of a mutual fund. Then we've got to go find more money to make more money. And so that was more or less the concept. And so each morning we would go in, and one of these salespeople for a company that was selling, maybe they might be selling a new dividend mutual fund, with mostly dividend stocks in it, and they would bring us donuts and go over this. Well, at the end of the meeting, the question that when they asked for questions from the financial advisors, the number one question that was always the question was, how do we get paid on this product? And I tell you that story and I make that point because when you read this report, it becomes very clear that and again, this is not about Edward Jones. They just happen to be the report I got. But all of these brokerage firms, they do not have in place yet, and it's all in the works. It's all in the works. They do not have in place yet. First of all, there are not any legit ETFs out in the market yet. Mutual funds, all of the investment products that these guys could make money on are not out there yet. They can't even sell the way they do stocks. They can't even sell digital assets individually like XRP. And so when they don't have products to sell, how on earth are they going to put a report together that is giving you glowing information about how great cryptocurrencies and digital assets are? They won't do it. But you mark my words and write it down and put it on your wall. The second that these guys have the model in place on how they're going to get paid and how their fee structure is, these reports, the one you're looking at right here, these reports will be strong buy reports on whatever it is. It might be an ETF with XRP in it, or they may be allowed to sell XRP, the digital asset itself. But trust me, that's what's coming. So look at here, look right here. It says, we believe cryptocurrencies are highly speculative. Edward Jones does not offer a way to purchase or hold cryptocurrencies or futures contracts on cryptocurrencies. Edward Jones does not offer a way to purchase cryptocurrency-related funds, ETFs, or ETNs that own cryptocurrencies directly or cryptocurrency-related over-the-counter traded securities. And so they're telling you they can't sell you any of these things. So go figure that everything in here is about all of the risks and how scary it is. Bitcoin tracing previous bubble patterns. Now, I'll get back to this because all I hear these Wall Street guys say on CNBC is about, the Bitcoin bubble. Well, I'm going to show you, I'm going to prove to you today once and for all how big of a lie that whole conversation is. But get down here. I wanted to read a little bit of this. These are the risks to it. I may stop during the reading of this because I want to make sure you understand where we're at in relation to what they're saying. The risks to investing in cryptocurrencies. While blockchain solves an important technology problem, the value of any given cryptocurrency remains highly uncertain. Cryptocurrencies such as Bitcoin, Ethereum, Litecoin have all exhibited significant price fluctuations due to these high levels of uncertainty. In addition to price risk, there are other risks to investing in cryptocurrencies such as loss of the device storing the digital asset. Right here, you know what I'm going to say. Go in the description of my video and get a Ledger wallet, because storing your digital assets, until there are cryptocurrency custody solutions for all of us individuals, go in the description of my video and get your Ledger wallet to keep your digital assets safe. Safest way. So in other words, this is not an issue. All of these, and then I'm going to keep going. Potential for government interference, competition from other cryptocurrencies, lack of a historical track record. Well, competition from other stocks have competition from other stocks. That's a stupid argument. Up here, such as loss, we covered that. Potential government interference. Well, guess what, people? I talk to you about your big boy pants all the time. The potential for government interference, we are right in the middle of getting past all of that. But if you didn't have that potential for government interference over the last 2 or 3 years, then those of you that have been sitting in XRP would not have made a 38,000% return at any time, because the high risk, high reward, we all took the chance. We all said, well, we believe that government is ultimately going to accept this. And that was our bet. We believed that they weren't going to be able to stop it. And because we looked past this and we just sat there and held, that's why we're sitting where we are now. Okay. Also, cryptocurrencies are not common stocks as companies and do not trade on the stock exchanges. Edward Jones does not trade on Edward Jones does not offer a way to purchase or hold cryptocurrencies or future contracts on cryptocurrencies. It's also important to note that money launderers, scary people. Now, money launderers are not involved in cash or anything like that. They've never been involved in that. In fact, the Tom Cruise movie that I may have mentioned to you that I watched recently, the one where he is flying for the CIA and flying for drug dealers back in the 70s and 80s, he had bales of drugs that there was no money laundering going on with cash back there, I don't guess. Back then, I don't guess. But anyway, anyway, they're laying out all of these risks. But what I'm here to tell you is that just about all of these risks that they're laying out will evaporate on their reports no, they'll always lay out the risks, but the risks are what make this such a huge opportunity. Most of these are just short-term risks, but you watch this whole section evaporate when they start having investment vehicles that they can make money off of. But I'm going to go over some more things having to do with this. I've already shown you that article. All right. I wanted to go over, this came up, and then I'm going to go back to the point I was going to make about the bubble. Stock ownership has fallen off since before the recession. They're referring to the financial crisis. But this takes you back all the way to 1998. And it's showing you the percentage of U.S. adults that have owned stocks since 1998 until 2016. This is 60%. It drops down, and then when this right here is this is during the internet bubble, and all of the Edward Jones and all the rest of them were pumping. They were talking up all these internet stocks and how great they were, and so the ownership peaked up here, and then you had the internet collapse, and that was a real bubble. You had the collapse, and it had gotten to, I've seen numbers anywhere between 9 and 13 trillion, and it all collapsed. And from that, you eventually got your Googles and your Amazons, but just like you'll see with digital assets, you had a lot of them thrown against the wall. Back then you had Webvan, Pets.com, you had all kinds of things that ultimately failed, and it was too early for them, or never was going to happen for those ideas. But eventually you had the cream of the crop rise, just like you will with XRP. But notice here that during right before the financial crisis, we had stock ownership peak at around 65%. Okay, and then now people lost tons of faith after that, and now, as they should have, by the way, and now in 2016, ownership of stocks was around 52%. All right. I want to show you what I saw the other day, which gave me the idea for this. The percentage of respondents who own Bitcoin or a similar digital currency. But trust me, when they give you these percentages, they're really talking about Bitcoin. These are the percentages by country of what percentage of people own. And remember, the stock ownership in the United States is around 50-something% right now. In the United States, approximately 8% of the population owns Bitcoin. Well, if 8% of the population owns Bitcoin in the United States, guess what that percentage is for XRP? You better believe it's somewhere in the 1 or below. Okay, so when you think in terms of when you hear about all these, when you're watching CNBC and they're telling you how scary this is and everything, tell yourself two things. One, Wall Street. And Brad Garlinghouse brought this up yesterday, so he knows it's huge too. One, the New York Stock Exchange is opening their exchange it's called BACT. They're opening it in November. And two, you are one of the lucky 1% or below in the entire United States who has your investment parked in XRP before the rest of the world decides that, hey, that's something huge. And guess what? They're going to have that you didn't have. They're going to have the Edward Jones and the Morgan Stanleys and the Goldman Sachs and the CNBCs and everybody else telling them how great it is. Because at that point, those people are all going to be ready to hype it up because they're going to have products they can make money on at that point. And that's just the way the world works. Okay? All right, I wanted to show you guys one more thing that is huge, okay? When you hear these people, like I showed you in that report, they're going to keep referring to this as the bubble, the bubble, the bubble, because they know that scares people away until they're positioned. It's bubble this, bubble that, bubble that. Well, this is an awful chart in terms of, it's really blurry, it's nasty, but it illustrates an important point that you need to let sink in. Because Bitcoin and all these digital assets, yeah, they've gone up a lot since the inception, but it is no bubble. And the reason I say that is because until things go mainstream where you can have real hype and a real bubble, and when I say bubble, I mean the Super Bowl ads. Until you start seeing Super Bowl ads, we're not approaching bubble, because everything will approach Super Bowl ad status before it comes a bubble. And we're not seeing that yet. You could see it this year, and I think in all likelihood you may start to see it, but I think the real Super Bowl ad year will be the next year, 2019. Anyway, okay. But look at this right here. Now, this figure is not even accurate. We're at more like 210 billion right now. Okay, the dot com, and I've seen different figures. I've seen anywhere from 9 to 13 trillion. This is when the internet bubble collapsed. We are right here, so we would be the equivalent. Now, if you look at this, they're saying we're the equivalent of 1990 at 340 billion, which would put us maybe like at 1989 at 210 billion. And so, but the other part of this is, if you look at the value of money, $10 trillion in 2000. Think about how much money has been printed since 2000. Think about how much debt that the world and the United States have gone into since the year 2000. It is unbelievable amounts. And so 10 trillion in 2000, my contention to you is that 10 trillion in 2000 is more like 30 or 40 trillion in 2018 and in 2019. And so, and not only that, but here with this .com bubble, we were dealing with the internet of information, where you can type in Google and within seconds, the information you're looking for will come up. But what we're talking about with XRP is the internet of value. We're talking about being able to type in $100 and having it go to whoever you're sending it to in 1 or 2 seconds. This is much bigger than the .com. Okay, so I think that I illustrated that point. I've got something exciting that I want to announce to you guys. We have decided to design a shirt. I mentioned in a video the other day that when I'm finally proven right and XRP goes to the heights that we know it's going to go to, that I want to go to Liechtenstein and have a beer. And so I said, you can meet me in Liechtenstein. So we decided that we would make a T-shirt out of it. And one day we're going to meet up in Liechtenstein. And I believe there might be so many of us we could shut the town down. So this is our new T-shirt design. It's got Liechtenstein's flag and their crown, and it's got XRP, and it says "See you in Liechtenstein," and on the back it says XRP Community, and you can get it in different colors. But I thought this was really cool. So go to this in the description of my in the description of all my videos. You can click and go to the XRP section, and they've got this shirt there now, and this is pretty cool. Maybe when the time comes, maybe we'll all wear our "See You in Liechtenstein's" T-shirts to the meetup. All right, and then I mentioned to you, go get your Ledger wallet, because Ledger has solved the custody issue for all of us average Joes out there. So go get your Ledger wallet if you want to store your digital assets safely. Also, I've been telling you about the WireX payment card, where you can load up your digital assets, including XRP, on the card, and then you can go out and spend with the card, and you can go in and out of your native fiat currency. I've had some questions about this, where people asking whether their country supports it. And so if you go to the card section and then you scroll down, there's some frequently asked questions. It says, where can I use the card? Wrong one. Who is eligible for the card is where it was. It says supported countries, and it will give you this list of countries where the card is available. Okay, so you'll be able to go and see if you're a country. But even if the card's not available, you can still sign up on WireX and transfer money in and out and exchange in and out of digital and fiat. And so, and there's about 50 supported currencies. So and then when they do have the card available, you'll be able to order the card. Well, I am not an investment advisor. I am the digital asset investor. This is for entertainment purposes only. I want y'all to please subscribe and hit the like button. I really appreciate you listening, and the channel's growing, and pretty soon I'm going to meet you in Liechtenstein. And also, one final thing I wanted to mention to you guys. I started a little Twitter campaign. For those of you that are familiar with Game of Thrones, which is a great show, you should watch it if you don't. It's on HBO. Throughout the show Game of Thrones, every once in a while a character will say, "Winter is coming." Well, I've started a new hashtag on Twitter because I think that we have a similar situation, but it's a good thing, whereas winter I think is considered bad in Game of Thrones. Wall Street is coming. So I'm gonna every time I do a video, I post it on Twitter, and from now on I will include the hashtag Wall Street is coming, because Wall Street is coming into crypto, and it's going to change a lot of our lives. Thank you for listening, and I will talk to you later.